Hello, folks. Brandon Chapman with you today. It's another Theo and I video for Monday, June 12, 2023. And what a day it is. The S&P powers ahead nearly 1% as we just continue to go parabolic over the last couple of weeks as technology and cyclicals lead the way. Of course, those are the higher beta sectors over the course of the last year. And so anytime you expect a short squeeze or you typically see panic FOMO buying, it's going to be in the higher beta names. And of course, this is happening just as the retail trader is entering the waters after a 3-month hiatus. And again, we're powering above 4,300, which was that kind of key level. So again, right ahead of the Fed announcement this week, the FOMC policy statement, and of course, inflation data from both CPI and PPI. So while this is dangerous territory, fear of missing out guiding the way here. Is there a silver lining, or is this just another example of 2022 strong hands selling into weak? To give you an example, I'm going to bring up the SPY. I'm going to clear my studies out here, but we're going to back this out to 3-year weekly. At this time back here, late 2021, there were these massive prints. I mean, just more so than you really generally see in the SPY, as particularly kind of conglomerating on that November-December timeframe. So every one of these yellow markers is over a 1 million print. Buy or sell doesn't matter. The reality is shares changing hands right as we kind of just experienced that peak in the market, and then we continue to decline from there. And these also, we saw these prints occur at key pivotal points for the market, at lows and highs. A high, well, right here we kind of broke through it, then came back around, but at a low here. Frequently, you'll see that in the trade flash today. Do we see anything? 2.2 billion to buy, market, and close. Not really a big deal. Right there, reported out of sequence with 1.4 million shares today on the SPY at 429.64. So I would generally want to place a marker at 429.64. I'll do this when it's over. But the point being is that's a pivotal level. Does that mean that the market's going to crash from here? No. It just means that 429 is significant. And what that means is if we take it out, we're looking to run towards the next level. We may come back around and retest it. If we break through it, then it should act as resistance. So what we do know from this print over here is that, look, 430 is significant, right? And we know that based upon the high going back to August 15th. And we know going forward that it should be a significant level. It's a round number, 430. About every $10, you could find some rather significant resistance or support. Right now, we're kind of trickling above that point, but we do have inflation data coming up tomorrow and CPI. And then on Wednesday, we have PPI, and we have the Federal Reserve giving their policy announcement, the FOMC policy meeting. They're going to give their statement. And as we look at the Fed funds futures right now, let me just refresh this from earlier today. What you'll see is that we're talking about what? About a 78% probability the Fed will stand pat at the current rate of 5.25. We got a 21% chance of going to 5.25 to 5.5%. Again, what is the CPI going to do to these numbers? You'd think there'd be more solidarity, maybe closer to 80-90% probability. But the fact of the matter is, and the Fed articulated this, Powell himself articulated that, hey, we may see inflation kind of tick back higher in June. Now, when we look at oil prices today slipped. Some analysts lowered their price target to 86, which is still well above the current level. But oil fell back 4.13% today. And we go back and we look at the energy sector. It was the worst performer today, down 1%. The fact of the matter is oil north of 65 allows for what? New production. So until we really start to see any traction below 65, with the federal government releasing from the SPR, Strategic Petroleum Reserve, that might be less likely, is that they may start to build the reserves back up, therefore establishing a floor at 65. So that's kind of what we've been working off, that notion. 65 to 70 is where the government may still step in, refill the reserves. But we have seen the rig count decline a little bit. Production, we'll get production numbers on Wednesday. But for right now, again, OPEC cutting last week. Now we're seeing lower price target this week. It is a little bit of a slippery slope for oil, given the fact that we do have these kind of dragging economy that may lead to recession, which generally is not so bullish for oil. Maybe this time around, production and supplies might not be in a good position, but you'd imagine oil prices would be higher if that were the case. Anyway, so let's look at a stock in the energy space. This is Oxy. And I've been looking for a couple of weeks for the trade to perk up in energy, and it just hasn't quite done it. Really, since about early May here, we've been looking initially with companies like Antero as an example, off of this bounce back here. Did get some movement out of it, faltered, came back, retested. We looked at EQT at the time. This was a natural gas company. This one has continued its upward trajectory, and natural gas stocks like EQT have done relatively well. We've also looked at refiners like an MPC, for example, that broke out last week with falling oil prices or subdued oil prices. Maybe you might see the opportunity where gasoline may appreciate relative to oil. And I can bring up a pairs ratio study, which will give a ratio of oil to gas. And what you're seeing right now is that this ratio has continued to rise over the last, little over a month. Something we're kind of anticipating is seeing this kind of recover. But we haven't exactly seen that, as dramatic of movement as spreads have widened between gasoline and oil. It hasn't exactly, lit these stocks on fire, but we did get a breakout last week in PSX. We already looked at MPC, Valero as well, has not broken out, but has recovered a little bit over the last week's rally in gasoline relative to oil. This is one to watch for a continuation of the breakout. And of course, you have the integrated name that makes it on the extraction plus the distribution plus gasoline, refining, etc. The Exxon last week had a nice little breakout here, kind of falling back a little bit. But just kind of watch these oil stocks as, again, if inflation comes out, a little bit below expectations, all of a sudden we start to price in a rate cut and the dollar starts to decline, is there a chance for oil and gold both to catch a bit of a rally? Notice today we're still consolidating against the euro. The dollar was strengthening. We've consolidated a little bit. We might expect another breakout one direction or the other. And of course, the implication for gold, similarly, we'd expect gold to break out one direction or another. Today, Kinross Gold KGC was a stock that saw some bullish option activity enter in. And again, this is a June expiration 450, so we're kind of at the money in here on the call side. But again, looking for a breakout. So we have some data in inflation and the FOMC statement that should potentially create a breakout in gold stocks, and the dollar this week. And the implications of a bullish breakout in gold and the dollar means what? Gold and the euro against the dollar would mean that this might help support equities. Why would it support it? Because if the dollar diminishes in value, the S&P is priced in dollars. All things being equal, it may cause the S&P to rise. And again, hopeful that the Fed may start to cut rates sooner rather than later. But that's going to key off probably some more favorable inflation data. If inflation comes out on the other side and being hotter than average, hotter than expected, of course, that may create bullish pressure on the dollar, weaker gold, and of course, a weaker stock market as a general rule. Now, the silver lining for a stronger inflation number and a stronger dollar, weaker dollar, would be that they're expecting, the inflation may cause the Fed to raise rates more, which may put more pressure on the dollar, put pressure on the economy, and therefore may cause them to have to raise rates further down the road or ease more down the road to accommodate. So it's kind of a wishy-washy market overall, and sometimes the response is not exactly as expected. But generally speaking, higher inflation generally means stronger dollar. And in this case, because of the heightened focus on inflation and the Fed funds rate, it may create bearish pressure on the market and may set up a pivot near this 430 level. This may just being the initial kind of blow off as retail trade has come in. Fear of missing out. And you look at the stocks that are moving today, Broadcom, Oracle, Intel, AMD. Oracle today, this is one that last week there was at least two different bullish option trades in Oracle. And of course, the stock today, making a rather sizable breakout to the upside to 116. Now, the earnings occurred after the close, And so this is coming in, actually beating expectations by 36 cents. Again, is this the blow off in Oracle? When we look at, for example, in Oracle, they do pay a dividend. It's now 1.37%. If we go to the Analyze tab, the fundamental data and toss isn't always accurate, but we can come down here. We can see the 5-year dividend weighted average of dividend yield is about 1.57%. So we're talking about, again, a relatively low yield and high price on Oracle. And again, have we eradicated any real semblance of value in Oracle as we're now trading it at multi-year highs here? And of course, Avago, AVGO. There's been significant bullish trade leading into its breakout 2 weeks ago. And again, we're seeing another breakout today. Anytime you get this kind of run, frequently you'll retest the high of the breakout level. And it looks like we may have a chance to stretch to approximately 900 to maybe 920 in this bounce off of Avago. Significant volume. AMD as well today saw some significant bullish option activity as well as last Friday. Today, we're basically back retesting the prior high of May 30. The question is, where do we go from here? This might be a reasonable time to consider shorting. But again, is the fear of missing out on the AI, artificial intelligence play, is this going to drive things further? Again, it's hard to know right now how crazy, how frenzied, how much chum is in the water for retail investors to come in and bid it higher. And of course, institutions maybe piggybacking off this and maybe selling into this significant strength that we've seen. But today in AMD, it was a June expiration. So go to 16 June, out of the money here at the 143 strike, 21,000 contracts against 1,200 open interest, mostly bought. Again, could we get to 143 by next week? I mean, it's crazy to think about. Sorry, by the end of this week, rather, because we're talking about June 16th. It might be crazy to think about. I don't think that's likely. But the fact of the matter is that you can construct, notice the volatility is rising in here for this week. You could construct an out-of-the-money call spread, maybe buying a 130, selling a 132. The vol skew is favorable for creating some spreads like this. And you don't need it to get to 143. You just need it to get to 132 or somewhat above that to realize greater than the 55% gain, which is what you'd be looking for the week. Also, it's not just AMD. Intel's participating as well. This is something we initially saw, some strong call option activity on the 30th of May. There were some previous to this, but in one of my classes, we talked about a potential trade looking at retesting the prior high here. Is there more to go? Well, if we look at this seed wave that developed and then we pulled back, if we measure this and project off that, your 161 is about $36. Your 138.2 longer term trend here is about 37.50. So we're looking for about 36 to 37.50. Maybe the possibility of this trend stretching to 42 in the coming weeks here. And the lower side of that is about $40. So we're looking at, if you're willing to hold through some ups and downs, $40 might be reasonable. Near term, we're looking at about $35.70 for Intel. The trade was really just a roll from July 7 July to 23 June at the 132 strike. The 32 strike. And so if we just, let's go here, 16, 23, 7. Take that off. We'll raise this to 32. You can see how this is playing out here as a spread trade. But you'll see 32, 32. So we end up closing out the July 7 and rolling it to a 23 June. So increasing the delta gamma potential if there is a big move this week or into next week. So again, primer, 32 is now in the money. But again, there's a primer here that may cause this stock to rise. And again, 36 near term. If you're willing to go for a few weeks, maybe towards 40 in Intel. And surprisingly, if we look in the, let's go to the July expiration here, notice the volatility. We're rising on the out of the money calls. It's unusual, but it's sign of speculative option long call activity driving up these out of the money calls. And so again, you could buy a lower strike and sell an upper strike, whichever one of these you want to do, depending on how far you want to get out of the money. But even something like a 34, 36, going for about 61 cents on a $2 spread, risking 61 to make a $1.39 in 39 days, just shoot for about 50% of that max gain. And again, you're kind of in the ballpark there for for an out of the money call spread. So again, very unusual volatility skew, bullish skew in Intel as well as AMD. And again, just kind of summing it up here with SOXL, I'm certainly not one that says, you should trade SOXL, but there are occasions when you can get that positive compounding, like from May, doubled in price practically. So again, sometimes you get that positive compounding, that bullish compounding when you see just day after day of up days. Today we're back across the high. Certainly don't advocate normally trading SOXL or its options because you have SMH. But again, you can use SOXL as a proxy for, or as an indication for bullish option activity, right? Bullish in what? In semiconductors. The AUG23 is now in the money here today. It was more at the money earlier, but the point being is that you're seeing a lot of buying activity at the 23 strike. Now in the money. I guess it wasn't in the money earlier, but it's close. It was at the money earlier, but anyway, this is kind of indicating money flow. So semiconductors, Intel, AMD, those are semiconductor companies. And so you're seeing that going back to the well in this space. The question is, have we outrun the fundamentals of these stocks? We very may well have. And so it's important to watch this week to see when we might reverse. Even stocks like Netflix, NFLX have had a phenomenal run of late. And today, Don put on an in-out spread in Netflix, buying it in the money put, selling it out of the money put, $5 wide, just looking for a small pullback here to get about a 55% gain or 30% gain in the next 3 days or 55% gain in the coming weeks before expiration. But, these are ones you typically go out about 30 days. But I'll share it with you here. So Don's was a 420, 415. So if we come in here, we saw a little rally towards the end. You could ratchet this up for a 7 July expiration, so 25 days. Looking for a quick turnaround on this one. But buying the 420, selling the 415. And so again, doesn't take a lot of movement. We just need to get some traction below 415. If you can do it in the next 3 days, you probably have a chance to close that out for about 30% gain if we could get down this 410 area here. If we get lower, you get even a more bigger potential gain. But anyway, just an indication of sometimes you get things that are rather extreme and you're playing the small little correction. Those are what's called the in-out spread, which were great in these very, very overbought conditions. Let's look at a couple other stocks here as we kind of wrap things up. But so again, retail trade, are they jumping in right at the time when the strong hands are ready to sell to the weak? Or is this start kicking off another FOMO where you get the option trade helping to spur the stock, which helps spur the retail trader to come in? Eventually, they're going to lose. But for the time being, you have this semblance of a victory as markets grind higher. Kroger, however, has not really participated all that much. We do have earnings coming up here on the 15th before the market opens. That is on was that Thursday? Yeah. So after the Fed meeting, so we see this kind of higher high, higher lows convergence here. This is called a rising wedge formation. If we break below today's low, we'd probably get this thing retesting 44. And obviously we have the chance of getting down to about 43. This is the seed wave, which is rather sizable, which really is looking at this thing maybe going back to 40, 50, or if we reach back even further, even much, much lower points. If we draw some fib retracements off of that entire big trend back here, you can kind of see that, look, I mean, this level that we're currently trading at around, or we've traded at previously at 42, 50, 75, we take this out, we may be looking at a full retracement, but near term, we're looking at a retest of low, possibly breaking down to 43 in the coming days to weeks heading down here. Today's trade in Kroger, this was a rather short-dated expiration for a June at the 41 strike, which is way, way out of the money out here, mostly bought, leading into an earnings. Look at this week's expected move. It's $3. We're currently at 46.38. Does that mean we have a 68% probability of maybe stretching down to about $3 below that, 43.38? Take 2 times the expected move. Is there maybe a 5% chance we get down to this level? Yes, right? That's what that's assuming. But remember, that's a very low probability that it's going to get down there. Better yet, you could look at the possibility of just doing a weekly, just an in-out spread, buying a 47, selling a 46. It costs you about 50 cents on a $1 spread. Break even is at 46.50. So if the price stays the same or goes down, you have a chance of making over a 100%. So you have a chance of making a 100% return this week if the earnings come out negative, and the stock declines, not to 41. We just need it below 46, and this should be closed at profit. Or if we really kind of gap down here, $3, you could readily close out for close to 100% gain. Again, the depth of the market's decent, liquidity is okay on this one as an option trade for Kroger. Let's look at XLI. So XLI Industrials, one of those stocks that are in sector funds that are up against the wall. The last 2 weeks, we've broken or closed above the expected move here. So if we kind of draw this in here, notice that this was the upper end of the one standard deviation range. We closed above the one standard deviation range 2 weeks ago. We closed above it last week, and today we're making a nice move towards that expected move right now. And we're hitting a level of resistance that's rather significant. And we've seen similar types of trades come in back around these levels earlier in the year. So today for XLI, what we saw, and this is an August expiration, so it's got a bit of time out there. You don't have to go this far out, but notice down here, double down to 8,000 contracts now, 98, 88, buying the 98, selling the 88, 67 days out. 88 is all the way down here, close to the September, October lows. But remember, you don't have to go that far out of the money. You could consider even just a simple in-out spread, going maybe closer to 39 days, buying in the money at a 104 and selling it out of the money at 102. Yeah, these prices are all messed up. But that's probably going to cost you less than $1 to do that, and which means you're basically sitting on your break-even point, and you just get a little pullback here. It should push you in a way to be able to close that in the coming days, 2 weeks, as an in-out spread. That's a possibility as well. CCJ, this is one that I originally saw really significant option activity back on the 26th. Looked like things were going to break out. They faded back, then we broke out a couple days later. We also had bullish option activity come in here on the 31st, leading that breakout that occurred on the 1st. And we see this flag formation today as the stock is, again, breaking out. So we see the channel formation, the flag pull, and you start to look at the 423% projection we set off the seed wave here at 36. And it certainly appears that as we look at what move was that? It was from 26 to about 31, 550 off the breakout here. Get you to about $36, which is near the 423% projection. So breakout entry potential today. And the trade on CCJ was a July 37, which is really, really close to that target. So it might take a few weeks to get there. But again, could you look at a similar kind of out of the money spread here? Notice that the volatility is falling all the way to about the 33 strike. But you could buy the 33, possibly sell at 35, $2 wide spread, cost you about 60 cents with about $1.40 of upside if we're north of 635 here. So it's going to take another nice solid move, but the reward risk is favorable. You might look to close it out at maybe 60 to 70% of max gain in a move like that. Finally, we're going to wrap up with Zoom, ZM. Now for Zoom, we've been in this kind of little symmetrical triangle formation. We retested our low back here. We've seen some higher volume updates. I'm going to bring up the on-balance volume study here. The on-balance volume study takes each day and either adds the daily volume to the total if it's an up day, or subtracts it if it's a down day. As we look over this time frame, this isn't exactly the most significant divergence ever, where you're seeing the OBV really rise strongly compared to the past. However, when you compare where the OBV is today relative to this point, it was at 73. Relative to this point back here, we're at 77. Relative to this point back here, we're closer to 85. And even past points, we can go back to this level here. The high was about $80. And so we're looking at the possibility, if we take out today's high, of running to 80. You look at the range on the symmetrical triangle, right? 61.5 to about 72. Again, that's about 10.5 points on a break of 70. That gets you to 80. So the $80 target here on a breakout seems very reasonable in the coming weeks. And as we look at today's trade in Zoom, it's a July expiration, and you look right here at the $80 strike price, 15,000 contracts against 7,000 open interest. Again, kind of ties in that 80 level. And boy, if we break that, that's where some gamma might kick in, given that this is a July with 39 days out. So it's going to be somewhat limited, but if we start to see that push closer or in the money, we could see this pop even further. But just from a technical basis, if we get a breakout, $80 seems like a reasonable target over the next few weeks for Zoom. Like anything, nothing's for certain. No, there are no guarantees in trading. But as you look out here to July, you can see the rising vol structure. You can buy the lower vol, sell the higher vol, and you have a relatively, there's a little bit of an edge here. A 70, 75 costs you maybe about $1.70 on a $5 wide spread. That's not terrible. These out of the money 80s have a 50% implied volatility. These are pretty juiced out here, and there's a lot of depth and a reasonable liquidity in Zoom for a move just up into this range for the next few weeks. Anyway, folks, got to wrap it up there. We'll catch you back next week for the Monday's video. Thank you. Have a great week. Thank you.